And welcome to a VSA Capital video blog and podcast. And I'm delighted today to have Nigel Robinson, the Chief Executive of Central Asia Metals, known as CAML. Nigel, how are you?
Yeah, very well, thank you, Andrew. Yourself?
Yeah, no, pretty good. Well, in the current market, we all have to be quite good because mining is actually. Everyone wants mining again.
Long may it last, Andrew.
Yeah, well, we'll come on to that, how long it will last. But let's just kick off. You fairly recently had your results. Which were very impressive, and you reinstated the dividend and things like that. You've also just recently had your Q1s as well, so a lot of news flow coming out of you. I mean, yeah, it's all been positive, but is there anything you'd like to add just to sort of highlight just how positive?
Yeah, I suppose just to reiterate those numbers really from the full year results from last year, which, as everybody knows, was a difficult year for a number of reasons in terms of COVID-19. We also, as people know, had an incident at TSF4. So it was a challenging year for us as a company. So, we were all very delighted to go through the year, firstly with no incidents on site from a health and safety point of view, which was very good. Our production was good and in line with our guidance, slightly under on lead, we know that, but only about 1%. So generally against a difficult background, we came in with the production, and those production numbers fed through into very good financial numbers. I mean, it was a game of two halves, in using the kind of terminology of football, which is very appropriate this morning, I guess, with the Super League and what have you. But the first half of the year was very challenging. Low commodity prices, the impact of the pandemic, the uncertainty it caused around the world on the commodities market, as well as operationally not knowing whether we'd have to close down through government instructions, etc. So the first half was difficult from that angle, and then the second half we saw a real rally, which has followed into Q1 this year of the metal prices, which is can only be positive for the mining industry across the patch, really. Certainly was for us. We generated revenues close to $170 million at gross level, and an EBITDA on that of $95.7 million, which is a 56% margin, which is tantamount to the low-cost operations we run both at Kounrad and Sasa. And we reported their low costs of 51 cents per pound at Kounrad. That's 51 cents per pound. That's just $1,100 per ton. And copper is selling what today, Andrew, at $9,200 per ton. So you can see a very healthy margin there. And at Sasa, the C1 zinc equivalent cost, which is the number we report at Sasa, that was at 50 cents per pound. So again, slight inflationary pressure from some of the treatment charges that we incur off-site, but 50 cents per pound is still very competitive. And zinc prices also holding up well into this year at around about $2,800 per ton. So a lot of positives there. That enabled us to generate free cash flow close to $59 million for the year. This is full year last year, of course, Andrew. Yep. And on the basis of that, as you know, we have a dividend policy linked to that number, and we pay a range between 30 and 50% of that free cash flow number. We actually, as a board, sat down and debated it and felt, given the confidence of coming through a difficult year and the way metal prices had started the year, and where we were in the cycle almost, that we felt paying 57% was a good return back to shareholders, which equated to an 8 pence final and 14 pence for the full year. So yes, delighted to be back paying dividends to our shareholders. We did reinstate that last year, as you know, at 6 pence in November. And then to give an 8 pence final dividend is a good return back to the shareholders for their support, really. And, what was a tough time. So
it gives you a very good yield, which is, in today's world where money yields nothing, it's very, very attractive. So I think you're back, should we say, to the good old days, CAML with a lovely yield. And your Q1s, I mean, again, they were all sort of fine. It was slightly down Q on Q, but, you had that last year. I mean, I think it'd be fair to say that, actually, you're pretty happy about the future. I mean, it's all looking pretty tickety-boo, as they might say.
Yeah, absolutely, Andrew. I mean, I think that there's not a lot really to read into the Q1 results. As you say, it was slightly down on 2020, should I say. But generally online and on track for our guidance of the year. And just to remind people what that is, that's 12.5 to 13,500 tons of copper, 23 to 25,000 tons of zinc, and 30 to 32,000 tons of lead. So just an update really to the market that we've started the year off well. The biggest positive on the first quarter this year is the metal prices. As you know, they've held up well throughout the year. And there's a lot of bullishness out there about the mining industry in general.
And that really is probably the key at the moment for CAML, isn't it? Is what commodity prices do, and in particular the copper price. I mean, yeah. Currently, I know that at VSA, we're forecasting you an EBITDA of about $118 million, but that's on our copper price forecast. If we took the Goldman Sachs one, which I think is as high as $15,000 a ton, that EBITDA number would go from 118 million to 199 million. I mean, that shows the sort of operational gearing. And so that obviously is key to you probably at the moment of what the copper price can do, and of course the lead zinc price. But at the moment, it does feel as they're all going to continue going on up. I mean, I'm not asking you to give a forecast particularly on that, but the wind is certainly in your direction.
No, I couldn't agree any more. I mean, I'm not sure whether I fully buy into $15,000 per ton, but the direction is right, and we're currently, and we have been for most of this year. I don't know what the average is for this year, but it's probably close to $9,000 per ton for this year. So, if that could continue through the rest of the year, then that's fantastic. Given the low costs that we have at both operations, we can make some.
Well, and that's the key, isn't it? I mean, you really are a very, very low cost producer, and if you've got that, you've got a fundamentally strong business.
Absolutely. Just one thing, I think what we will see, and we had this raised by a lot of our investors, and I think we will start seeing this, I haven't directly seen it, is you may start seeing a few small elements of inflationary cost increases coming through, because, outside of the mining industry, I know myself from other businesses and people I talk to that, moving goods around and trying to get hold of things in certain industries is quite difficult, which can only lead possibly to some inflation. So I think we have that slight word of caution, but we are low cost. We will be able to, accommodate those inflationary increases, which I think will probably come through. And if metal prices stay where they are, we're going to make some good returns this year for our shareholders.
Just picking up on a point you mentioned earlier, you said you sat down with the board to discuss the dividend things. I mean, you sat down with the board, and you haven't got quite the same board now that you sat down with then, I don't think, Nigel. What happened at that meeting?
What happened?
I can understand. But the company is evolving, isn't it? Do you want to just talk through that a little bit, perhaps?
Yeah, by all means, yeah. I mean, I don't think that would come as a surprise to people. I mean, obviously, we regard ourselves as a very well-managed business. It follows good corporate governance, and many people know there's some theoretical guidelines on corporate governance about non-executive directors rolling off the board after 9 years. We've had several directors been there longer than 9 years. We have a CEO, an ex-CEO, Nick Clark, who's now the chairman. That's frowned upon. But I think those things, aside, we've been able to, persuade investors that we've done that for the right purposes. Nick's experience is invaluable to the business. A small business like ours, Nick's experience as the chairman and his the degree of continuity between me then becoming CEO when I was the CFO is invaluable for the continuity of the business. But on the succession planning, we've had in mind for a while that we'll do some succession planning and bring some new blood into the board. And we were delighted that we managed to get someone of the caliber and experience of Mike Prentice to join us and join the board, which is great. And a couple of people who are currently on the board who've been there since the founding days of CAML, Nigel Brown and Robert Cathry, will sadly depart at some stage in the next year or so. And they've been fantastic members of the board and added a lot of value for shareholders and a lot of experience to someone like myself. But unfortunately, these things happen and you have to move on in life and replace those people. And I think it's right and proper that the board has a succession plan in place. And, we recruited a lady called Gillian Davidson to be our sustainability she chairs the sustainability committee, should I say. She's another NED on the board, and she's been fantastic value in the 18 months that she's been with us in terms of looking at things from a different angle. And as you know, Andrew, sustainability is a top focus for a lot of our investors at the moment. So she's added a lot of value to the board's understanding of that topic as we move forward and drive our business forward in that direction. So I think both Mike and Gillian will be great additional, Bob and Nigel, when they eventually depart, will be sadly missed. We'll keep in touch with them, and the board will go from strength to strength as we move forward, really, I hope.
No, look, I think it's very good evolution because I think, as you say, Nigel and Bobsy gave a huge amount to the company, but a lot of that has done, if you see what I mean, and Mike and Gillian will add even more. So I think it's a great move. But I suppose my question leading to that now is, with quite a new board, well, you're not new, you've been there actually for some time, but it still feels quite new in a way. But there is a bit of a new board, shall we say, and I think a lot of people do talk about what will CAML do next, and that therefore must be one of the top priorities of this new board is what are you going to do next? And we've discussed a little bit in the past. I mean, is there any enlightenment you might like to try and give? I mean, you've obviously talked a little bit in the past that you would look perhaps at critical metals, battery metals, but it's got to be in a safe jurisdiction. It's got to be low cost, bottom quartile sort of thing. I mean, what's your current thinking on this?
I don't think the changes in the board necessarily will change the strategic direction of the company at all, if I'm honest with you, Andrew. I mean, a lot of that should be down to the executive management, myself and Gavin as the CFO, and Louise Ruthell as our Director of Corporate Relations. And we meet weekly on looking at opportunities that are out there. So I think, it is very difficult, I think, in the mining industry to be very hard and fast on a strategy and follow a very clear path. I think there has to be an element of opportunistic approach, to various things. But I think we're fairly, clear in our own minds that copper is a metal for the future that we want to be involved in. So we would like some more copper if we can get it. I know a lot of people are looking at copper assets, and therefore you've got to pay good money for good assets, but that doesn't scare us really. I think we pay good money for Sasa, and that's a good asset. So we've shown that we can do it and financially engineer it to get good returns for shareholders and make it still accretive for shareholders. So I think, in terms of orders of priority on the metal front, it will be copper and possibly zinc second, maybe lead third, I think it's fair to say. In terms of expanding out into battery metals, again, and we've discussed this, Andrew, several times, I know we have, and we've looked into it, done some research, and I think if we do go down that path, we would need to probably partner maybe with somebody else and get some expertise outside of the current expertise that's in CAML, because it is a different business. It is, it's more chemical engineering, it's a different skill set, there's a different route to market, there's different factors come into play, different risks, different benefits, and obviously it's a great market to be in at the moment, the way the world's going. So we do see it as attractive, but I think we also recognize that it wouldn't be something where we would just potentially buy an asset and then manage it and run it ourselves, because we need to buy in the skills to do that. So
I don't think on that point though,
it's changed.
As you say, copper assets at the moment are pretty popular, and the market, raising money in the capital markets for mining projects suddenly has become quite easy. How long it will last, I don't know, but these valuations have gone up, so it will be tough. But we were just involved at VSA with a deal in vanadium with ferroalloys, and Sir Mick Davis coming in with Vision Blue Group, and it's quite an interesting structure he put in place there, where he effectively comes in as a partner through a series of option levels where he can put in more money, which de-risks, I suppose, his investment. But the market took that phenomenally well. The stock jumped almost fivefold overnight. Is that, you said there you'd like to partner with something if you went down that route. Is that something, that sort of a structure, something you might consider, or do you still feel you need to have complete control?
I think there's different angles to the strategy in some ways. I think that is something that we'd be interested in doing, and I think that's the right way if you go into a market that you don't fully understand. I think it does de-risk, and I think that was the transaction you're referring to there, Andrew, sounded a very good transaction and well thought through as to how it was managed, really. And there's been other examples of that where it's been a strategic partnership. I think the Sibanye-Stillwater one is another example that springs to mind in that. But that's kind of going down one side of the strategy. That wouldn't fundamentally change the company overnight. It wouldn't be a transformational transaction, I don't think. So we are still looking at those more transformational transactions. And, you look at that end of the market whereby we're a company of a market cap, say close to £500 million almost at the moment, that kind of level. It's a tricky area to be in with the capital markets, and you do need scale and liquidity. I don't think that kind of transaction we just talked about will give us that necessarily overnight. I think we need to look at either bigger acquisitions on a kind of buying an asset, or possibly even a combination or merger of equals, really, with other businesses, in the mining game, in the similar kind of base metal sector that we operate in. I mean, you've seen it in the gold sector, consolidation and combinations. You could expect it in maybe the base metal sector as well, and I don't think that's
look, the market likes that. The market likes it, doesn't it? I mean, as you say, you've seen it in gold. Actually, we saw it a couple of days ago in lithium with Orocobre and Galaxy getting together to create a sort of lithium major. I think it would be pretty good. And I think, as you say, you're a 500 million market cap. The idea that you could be $1 billion market cap, it's very achievable, actually. It just needs that right step. And I think the market would be very supportive at the moment.
Yes, I think you're right. I think there would be. I think there's a demand for the right companies in the right metals and the right sectors, because, how are these countries going to get to net zero by 2050, 2030, 2040, all these different targets, all governments? It's not, we talked about this last time we spoke, I think, Andrew, in terms of, are we going into a super cycle? I'm not 100% convinced, but I can see that there's a fundamental underlying argument here that it's not just all growth from China. It's growth around the world, because everybody's striving for that decarbonisation of the world, and you can only do that with certain metals, really.
Actually, for yourself, you don't need a super cycle, because you're such a low-cost producer. You've got a strong management team. You're well supported. You've got good shareholders. I mean, so long as the prices stay where they are, actually, you've got a very bright future. If prices go up and we're a super cycle, I mean, you're laughing. So, you know, actually, it is at the moment a really good story. And I think, you know, probably if you look at the market cap, as you say, you've recovered a little bit from the wobbles of, should we say, where a lot of companies wobbled a year ago with coronavirus coming in.
Yeah.
You're in a great position. So, I mean, I think it's onwards and upwards from here, isn't it?
Well,
Say that, but I can say it as VSA Capital, we definitely think you're a buy.
Well, you'd like to think we've got a very solid base from which to grow from. And as you point out, Andrew, we could sit here quite lazily and just say, well, let's just stick with the assets. They've got relatively long lives, but, you know, ultimately they are finite assets. I mean, Coonrad's out to 2034 and SASA 2037, at least, really. You know, that's just on the Spinney-Wrecker ore body. So, you know, with low costs and, you know, the project, certainly at Coonrad, fully developed, so it doesn't eat a lot of capital every year, and nor does SASA. It is at the moment with our transition, as you know, to cut and fill. The next 2 years, there's about a $20 million capex program. But that aside, we'll have invested for the future for SASA then. And the one thing we haven't touched on from, you know, in a difficult year last year is we managed to maintain the strength of the balance sheet by deleveraging. We paid another $38 million off our debt. So at the year end, we had $80 million of gross debt from what 3 years ago was nearly $200 million. So as we keep eating into that debt, we grow the capacity to take on more debt to acquire an asset in the future. So strong balance sheet, low cost operations, long life of those operations gives us a good base to grow from. I think you're right.
Well, strong management team as well. I can say that easy for you, but you have got a strong management team. Nigel, look, it's great to chat. We'll call it a day there because people have all got limited time. But if anybody who's listening to this or watching this has further questions, do get into contact with VSA Capital, and either we'll answer it through my analysts or my geologists, or we can feed them through to you, Nigel. I'm sure we'll get back to you. But it's a great story at the moment. Well, and I'm really excited about what you might do in the future. But you don't have to, as you say. It's going to be a great story anyway.
Thank you very much, Andrew. Yeah.
All right. Thanks a lot, Nigel.
Thanks. Bye-bye.